All right, we're live. So welcome back to Dapp University. So today we're going to talk about something that's a pretty big deal for crypto, particularly what Coinbase just did and announced yesterday. Okay, we're looking at that. We're going to look at a lot of news in the space that's happened since yesterday. We're going to look at the crypto markets. Things are really starting to heat up here, answer some of your questions, and a lot more. So if you're around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step-by-step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, there's lots of scammers just impersonating me down in the comment section below. Just ignore them. Like, I'll never give you my phone number on YouTube. That's insane. So just ignore them. I'll never ask you to invest with me. And, of course, as always, nothing I'm saying in this video is not to be financial advice to get you to buy or sell any cryptocurrency. So we've got people jumping in the chat here. We got Culture Highs. We got Michael. We got another Michael. Neil, David, Kaylee, Shane, Francis, Mark, Anthony, same Michael? Yeah, same Michael. Lots more. Abramo, hope I'm saying that right. Awesome, welcome. All right, so let's jump into this. This is big, all right? So I'm supposed to tweet up my screen here. There's an announcement yesterday from Brian Armstrong, of course, CEO of Coinbase. So we recently received a board approval to purchase over $500 million of crypto on our balance sheet to add to our existing holdings. All right, and we'll be investing 10% of all profit going forward into crypto, okay? I expect this percentage to keep growing over time as the crypto economy matures. So hopefully over time we can operate more of our business in crypto. Today is still a bit of a mix. So why is this such a big deal? Well, let's start off with this. So Coinbase now is a publicly traded company. All right, we had the Coinbase IPO happen, I guess it was in May. That was kind of marked the temporary top for crypto so far. And we talk about a lot on this channel about institutional adoption of cryptocurrency and publicly traded companies actually holding cryptocurrency on their balance sheet, specifically starting with Bitcoin as this, inflation hedge, store of value, maybe hybrid with speculative bet as well. We've also talked about institutions going down the risk curve and holding other assets on their balance sheet, okay? Things like Ether. We've talked about, Ether kind of elevating its status to become an institutional grade store of asset, institutional grade asset store of value that companies, even publicly traded companies, can hold in their balance sheets as well. And we're starting to see more of that with Coinbase, okay? So, of course, Coinbase started off when they did their filing for their IPO. They showed it held somewhere in the range of 365 million in crypto. Okay, of that, 230 million was in Bitcoin, 53 million was in Ethereum, 49 million in stablecoins, and 34 million in other crypto assets. Okay. So this is big because, this is setting the tone for other publicly traded companies who want to do the same thing. And Coinbase is putting their money where their mouth is. They're a big believer in crypto, and they're adding to this exposure. And they're going to continue taking 10% of every profit that they make and reinvest it back into the crypto assets themselves. Okay. So you can look at a website like CoinGecko.com and look at publicly traded companies who hold Bitcoin, and see a list of companies there. All right, so let me just pull it up on my screen here. You can see publicly traded companies that hold Bitcoin, all right, and this list kind of keeps growing and growing and growing. And you can also go here and see publicly traded companies that hold Ethereum, so you can just change this. All right, and you can see that ever since we started tracking this list as it came out, this is growing. And now we have Coinbase as the #1 at the top of this list. We have Hong Kong-based company Meitu, I hope I'm saying that right, Mogo Inc., all right? And so this is the type of thing that's going to keep growing over time as it becomes more common practice. And why this is such a big deal is because, institutions getting into the crypto space can move the needle for crypto adoption a lot faster than retail investors or you and I, for example. People who are just, kind of going online, Googling, how can I buy cryptocurrency, signing up for a Coinbase account. Those types of people can only invest so much money. Now, there'd be wealthy individuals out there who can help move the needle a lot faster, but institutions getting in the game you only need a handful of those to really move the needle, whereas you need a lot of individuals or retail investors to move the needle. And Coinbase is leading the charge in this, all right, especially for blazing the trail for other assets beyond just Bitcoin, like Ether, quite a few DeFi coins, and more, okay? So it's also a big deal because they're going to start setting the tone for how people can do this. Because when you're an institution, you buy crypto, you're not just like signing up for a Coinbase account, right, and then going in there and then like setting a limit order or doing a market buy. All right, it's a lot more complicated than that. And there's usually a lot more people involved, and then you have to account for that on your balance sheet and how you hold it. And there's, at least I would think there's quite a bit of, quite a few constraints on what you have to do in order to be compliant with that as a publicly traded company. And these are the types of things that, these trailblazers can really, the problems that they can solve, and they can share those learnings with other people who want to actually do this as publicly traded companies and create easier on-ramps. And that's, of course, going to help Coinbase's business because they're going to have, I'm sure, products that reduce that friction significantly. So that's another reason why this is bullish, is when you want to bring more institutions in the space, there's a pretty big network. They're just going to say, hey, how did Coinbase do it? You know what I mean? Like, give me what they've got. And, of course, that's going to benefit Coinbase because they're going to have, I'm sure, some sort of productized offering or service where they can integrate straight into Coinbase to do the exact same thing. In the business world, it's called, dog fooding. You're basically like, you're eating your own dog food. So, speaking of this being good for crypto, let's look at the crypto markets, all right, and kind of talk about what's coming down the pike here. Because, I'm seeing lots of signs that things are about to get crazy. All right, I actually put this on my Twitter later last night. It says like things are about to get crazy, aren't they? Right? Things feel like they're about to get crazy for crypto. I mean, I'm seeing lots of signs of this. Some of this is sort of just like spidey senses of being in this space for a while and realizing, kind of seeing things start to pop off. So what I think this, right? I've been talking a lot on this channel about, how people have been worried about the crypto prices over the past several months since we peaked out since May, that like I didn't think we're going into a long-term bear market. We might see a short-term bear, but I felt like the larger bull trend was likely intact simply because the nature of the crypto game has completely changed. Adoption is running wild, right? More people are getting into the space. We're seeing institutions hold crypto on their balance sheet. All right. And so one reason I think things could very likely get crazy now is because basically, crypto has made, we had a pretty big correction. Let me just pull up on my chart here. I'll just pull up the simple chart on CoinGecko. Then we can check the official prices and look at some moving averages and all that type of stuff. But, ever since we had this correction back in May or April for Bitcoin, things went really bearish through here. And so we started to see a lot of hope kind of emerge as we've seen this correction, as we've seen things kind of recover. And then we kind of got to this point where the recovery itself started to kind of lose some steam. And then people were like, oh gosh, this is a dead cat bounce and everything's over again. So I think we're starting to see lots of signs that show this is not a dead cat bounce. First of all, every time we get some sort of slight correction, Bitcoin kind of gets gobbled up and moves forward. The other thing is we're starting to see other, smaller cap, I say smaller cap, but smaller cap than Bitcoin cryptocurrencies reach all-time high. Of course, Solana just hit a new all-time high. I believe Cardano is printing a new all-time high. Lots of others are starting to reach their May levels and before. Okay, and so I feel like this is bubbling up to the major cap cryptocurrencies as well, and it feels like things are about to start getting crazy again. I don't necessarily mean that every single crypto that was going crazy and early this year is going to come back. Who knows if Safe Moon will ever have its day again. Safe Moon might be done for good. But I do think that things are likely going to get crazy soon. So let's just pull up TradingView here. Actually look at a few technicals. Again, I'm not a big technical analysis guy since I'm not super skilled at TA. I mean, I try to keep TA in light of fundamentals. I try to really stick to fundamentals just because, I'm an engineer. That's how I think. I don't really try to divine the charts and say like, oh, this is what the price is going to be like in, tomorrow or next week or next month or anything like that. I try to think about, the fundamentals, like what determines cryptocurrency prices. If it's basic supply and demand economics, well, what are the reasons people demand them, right? As long as the economics are sound. And we see those reasons, and then the charts reflect that truth. And then you use both of these things to kind of say like, are my assumptions wrong on either side of this? So it's just another way of looking at it. So yeah, basically here, and one of the reasons I think this is pretty bullish from a technical indicator is we have these two giant green candles, all right? And this 200-day moving average is something that a lot of people are looking at. I mean, by definition, for Bitcoin to really be in a bull market confidently, it has to be above all its long-term moving averages consistently, right? And that just stands to reason. Like, your moving average is just a performance of your past performance, right? And so your current performance needs to be, above your past performance average in order for you to be trending higher, right? Be bullish. And that this is where people weren't totally confident that we were going to be above that. And now it's looking like Bitcoin really wants to be above that level, okay? So from a technical perspective, that's how I'm looking at it. Even though I'm not a big, technical analysis guy, that's just kind of how I feel about it. So let's look at the Ether price as well. Yeah, same story. I mean, ETH is, doing well above all its long-term moving averages. ETH looks like it's pretty coiled right now, like it wants to make a jump. That's just kind of how I feel about it. We're starting to see some consolidation around here. ETH kind of does this. We've seen this in the past where, I mean, look at these like consolidations in a bullish pattern, and then boom, you know what I mean? Yeah, it's looking pretty coiled, like it wants to do something soon. So, not financial advice, of course, but if things do get crazy again, I could see this, I could see this doing its thing. And some of this also just comes from intuition and experience of just being here for a long time and kind of saying, well, I've seen this movie before. I kind of know what happens next. So let me know what you all think down in the comment section below. Are you bullish on Bitcoin, Ether? Is there something else you're bullish on, bearish on? In terms of the statistics, we're starting to see this, the scarcity side of the economics for ETH really play out. So, Ultrasound Money is the website that I've been checking a lot for checking on the ETH burning statistics because, of course, we had the London hard fork happen recently. ETH is getting burned every single block. And you can see the ETH scarcity engines, labeled here. So staking 7 million ETH in 9 months. So the staking contract for ETH 2.0 now has 9 million ETH locked up into it. It's not going anywhere. It's a little over 5% of the ETH supply. It's actually about 6%. DeFi, 9.5 million ETH in 3 years. And so that's going to be like, maybe 8%. So right there, we've got about 15% of the entire ETH supply that's just like sitting somewhere, not doing anything in a verifiable way, okay? And then even more just in people's wallets that aren't doing anything. But yeah, basically 15% of the ETH supply is being productive right now somewhere else. It's not going anywhere. And then on top of that, we're now burning ETH. All right, let's see here. Let's calculate the ETH burn. So 67,937. So let's round up here. Let's just do some simple math. So about 70,000 at about $3,200 per Ether. So that's 1, 2, 3, 4, 5, 6. So 224 million. So about $250 million worth of Ether has been burned. That's pretty nuts. Somebody says how crazy. A few weeks ago it was the end of crypto. Hell, yeah, that's kind of how this space works. People kind of feel that way. So let's see here. So somebody is asking me about taxes for their remote job. Of course, I'm not a tax attorney or an accountant of any kind, but I can just give you some basic advice. If you're talking about I talked about this in the stream yesterday. Actually, somebody had the same question. I don't know how it works cross country. In the United States, like you don't pay income tax in the state that you live. Basically, if you work in a different state, you don't have to pay both taxes if you're working in one state. That's typically how it works. But don't quote me on that as an accountant. I would just use that as a starting point to maybe clear your mind. If you're like, oh my gosh, I have to pay twice. You usually don't. course, somebody at the stream yesterday said, well, they know a construction worker that has to pay in both states. But I think that's probably because they go actually work in that state. Whereas if you are working remotely, you're working in your own state. It's just that the employer is somewhere else. I'm not a big taxes guy. That's right. I don't like paying taxes either. You could interpret that however you want to. Somebody says, where I see the ETH price by December 2021. I hear really crazy price predictions in 3 to 5 years. So I've actually got a video coming out pretty soon. Subscribe to the channel where I'm actually breaking down a price prediction of $150,000 per Ether by 2023. Okay, so make sure you subscribe. I'm not going to give it away in this video about why that's the case, but or who made that prediction and what, all the details. But part of the sort of outlandish price predictions for Ether are really based on fundamentals and where this technology is headed, and everything I've seen on this channel, which is basically why does a cryptocurrency have value in the first place? It's supply and demand economics. If you create technology with extremely high value for other people with strong incentives to use it, and that technology incorporates the cryptocurrencies themselves, so basically they have to have the cryptocurrencies in order to use the applications, then the value accrues to the cryptocurrencies themselves. If they have sound economics behind them, and we see that ETH is having incredibly sound economics behind it, including deflationary economics behind it within the next potentially 6 months, okay? And so you combine that with an exponential rate of adoption, then you get an exponential price increase. It's like the statistic Raoul Paul is talking about. Basically, blockchain technology right now is the fastest growing technology in the history of the world, and it's being adopted, or fastest rate of adoption of any technology in the world, and it's being adopted at twice the rate that the internet was if you count at the same number of users. So, however many active users we have of blockchain right now, you take the internet's history and you start with that same number, and blockchain's moving at twice the rate. Let's see here. Yeah, Coinbase put 500 million more into crypto. Yep. Somebody says, I currently hold 25 ETH, so what happens when ETH moves to proof of stake from proof of work? Will my ETH be converted to ETH2? Yes, it will. You won't have to do anything. Somebody says I can save crypto on a VHS tape. That's awesome. All right, so let's look at a couple other things here. So let me pull this on my screen here. My links keep opening up on the wrong. So we did see a tweet come out yesterday. It was a quote from one of Kathy Wood's statements, of course, from ARK Invest, talking about crypto has more transparency than traditional finance, and this is a big deal. Why crypto is valuable in the first place? Because I know this gets people confused when you talk about decentralized finance or DeFi, thinking that like DeFi is a bit of a misnomer because it's not all decentralized. Like lots of DeFi have these centralization points, right? But even in those cases, like one of the biggest benefits is the transparency. Okay, so transparency, faster settlement, all that type of stuff. So because even if something's not completely trustless, you're talking about trust minimization and transparency. So you actually minimize trust on a counterparty the more transparent the process is, if that counterparty has skin in the game and a reputation to uphold. Because one of the biggest problems with finance right now is there is no transparency. So it's really easy for somebody to do something kind of shady behind the scenes and even keep their reputation intact because you have no way of knowing that they did it. But if you actually introduce transparency into the equation and it's completely auditable, and then people can go in and say, well, hey, look, you did this thing, it's a lot easier for them to get indicted. And it puts more pressure on those people to act honestly. Okay, so you can't really minimize trust with completely anonymous actors on the other side, because at the end of the day, sure, somebody can always build a rug pool, and you can't like you're just kind of screwed if you participate in that and you get rugged. But when you're talking about major players coming in the space and actually adopting a transparent financial system, then there's strong incentives for them to act honestly, and the transparency is the big benefit of that. All right. Of course, the automation is huge. We can create larger returns for yield with automation. We can basically make auditing way easier with automation because it's all transparent. It's a deterministic machine, so you just as long as it's accounting that always balances itself, right? There's no double entry accounting on a blockchain because, well, it's like you just pull the data, and it's right. Okay, so let's look at a couple other pieces. We're talking about institutions buying into crypto, why it's such a big deal. We're seeing more and more big players get in the space. So we're seeing Wells Fargo and JP Morgan partner with NYDIG to launch Bitcoin funds. Okay. So if you're not familiar with NYDIG, basically they help like major players come in and do the thing I was talking about earlier, like buying Bitcoin and putting it on their balance sheet, for major companies. Okay. Because again, this is not like an easy problem. if you're an institution and you're buying, $500 million worth of Bitcoin, like Coinbase did, just like register for a Coinbase account and just go put some limit orders in, and then boom, they're filled. I mean, you don't have that amount of liquidity on the exchange itself in the first place. Okay. You have to do this over time. You probably have to, it's pretty complicated. Okay. And then you have to actually account for all that and then do it in a way that's compliant. I guess with the SEC, if you're a publicly traded company. I mean, I don't know all the details of how it all works. That's just what I can ascertain from, just watching this take place and watching other people talk about, holding this on their balance sheet. And so that's literally like what these companies are there for. And so we see Wells Fargo, JP Morgan partner with NYDIG to launch Bitcoin funds. All right. So we see more people saying the need for this who are outside. And this is bringing more and more money in the space. So you got some of the questions in the chat here. Yes, definitely smash the like. It really actually does help the videos out on YouTube, because that means YouTube's more likely to share them to other people. YouTube's based on engagement. So the more you engage with the video through any way, like, smash, subscribe, share, all that type of stuff, click, watch the whole thing, YouTube recommends it to more people. So this is funny because Binance Smart Chain is a fork of ETH and SafeMoon is a big project building off Solidity. You would think I would be cheering them on because it's a hat tip to the tech. So why the hate? I don't hate on Binance Smart Chain. So the thing about Binance Smart Chain, and we talked about this a lot at the beginning of the year when it really started to pop up. Basically, so Binance Smart Chain is a fork of Ethereum. It is EVM compatible. It's basically they just forked the EPM, changed some settings to make it faster and cheaper to use. Now that being said, it's way more centralized than Ethereum is. I mean, you can verify this for yourself. The node count is tiny compared to the Ethereum network. So it's way more centralized in that regard. The thought here is that basically probably largely mostly run by Binance. The nodes are anyway. So this is one of the problems that why you can't just fork Ethereum and then change the settings and make it faster. That's what Ethereum would do if that worked. Because if you make the the gas limit for block way higher, then what happens is you increase the hardware requirements for the actual nodes themselves. And so now you're at a point where you can't even run consumer grade hardware to run a node. So you have to get these crazy machines. And then now guess what happens? You basically need people who have a lot of money to run a node in the first place. And now you have to have a lot of money to stake ETH on ETH 2.0. I get that. But the actual hardware itself is way more expensive. And so what happens is basically now you have Binance running nodes and you have them running I think it's 21 nodes or something like that compared to the thousands of ETH nodes. Okay, so it's a big difference. So what's the big problem here is, censorship resistance. So if you know that a single company basically runs all the nodes, then what happens when regulators come in and say, hey, this app, you can't run it on your blockchain? Well, it's going to get censored, okay? And you have basically one company controlling a lot of on-ramps and off-ramps. They could just freeze your funds if you try to get off the blockchain. It's way more centralization. And I guess the last biggest thing is it has been widely advertised as being this highly superior solution to Ethereum while being pretty dishonest about its limitations. So those are the big reasons why I just want people to know what they're getting into. I'm not saying it's bad. I'm not saying people can't use it. They just need to know what they're getting into, and most of the time they don't know what they're getting into, and there's no incentive to be honest with people about what they're getting into, because the whole point is we're going to position ourselves as an ETH killer, and how do you make yourself look good? You make somebody else look bad, and you are dishonest about the differences. That's my biggest problem, and that's true of most layer ones out there. They do the exact same thing. Somebody says ETH 2,500 by Valentine's Day. I like it. Maybe it's next Valentine's Day. Maybe that's what it is. So let's see here. Somebody said I can save crypto on an 8-track. 70, it's not dead. It's awesome. Yeah, 32 ETH not practical. Yeah, but the difference is 32 ETH was practical for a long time. Basically, ETH was $100. $3,200 was pretty practical for people who had long-term skin in the game. It's going to be harder for new people to buy in and run Ethereum validators, but the whole point was it would never be cheap to buy a computer that's going to run a massive racehorse, engine of a node, right? It's never affordable, right? But it was affordable to buy ETH at these cheaper prices. And those are the people who have more of a long-term vested interest in seeing the Ethereum network run anyway. So that's the difference. Somebody has a customer support question. So there's an email in the description below, or if it's not in the live stream description, it's in all my YouTube video descriptions. If you have a support question, feel free to reach out to that email. We'll get you taken care of. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. If you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find any of my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So That's all I've got, and until next time, thanks for watching Dapp University.